Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. US stocks retreated on Friday, led by continued weakness in technology shares. This came even as investors broadly welcomed President Donald Trump's nomination of Kevin Walsh as the next Federal Reserve Chair. The S&P 500 slipped 0.43%, marking its third consecutive session of losses. The Dow Jones declined 0.36%, while the Nasdaq fell a sharper 0.95%. Asia-Pacific stock markets mostly fell on Friday, tracking losses in the US market. Nikkei was down 0.1%, Hang Seng fell 2.02%, while Australia's ASX 200 declined 0.65%. Moving to Indian markets, the Nifty ended Friday's session at 25,321, down 98 points, whereas the Bank Nifty closed at 59,610, down 347 points. Nifty opened on a negative note but stayed in a tight range, clearly waiting for cues from today's Union Budget 2026. The index formed a spinning top candlestick, highlighting indecision and a pause ahead of the big event. Notably, Nifty continues to respect its 200-day SMA around 25,200 for the third session in a row. On the upside, resistance is seen near 25,420, with eyes on the 25,500 level, which is the highest call writing base for the weekly expiry. A strong breakout above 25,500 could lead to short covering and a quick move higher. On the flip side, a break below the 200-day average may pull the index towards 25,000, and with the budget today, expect heightened volatility and sector-specific moves. Meanwhile, on Friday, Indian equity navigated a period of weakness as benchmark indices snapped a three-day winning streak via a gap-down opening that invalidated prior bullish momentum. Foreign institutional investors exhibited a marginal buy of 2,251 crore rupees in the cash market. However, this provided little relief against a staggering month-to-date net outflow of 36,703 crore rupees, marking the most aggressive capital exodus since September 2025. In the derivative segment, Nifty futures witnessed a 120-point decline alongside a 2.4% increase in open interest, confirming a textbook short buildup. Conversely, Bank Nifty futures dropped 301 points on a 3.6% reduction in OI, indicating long unwinding as conviction from the bulls evaporated. Sentiment remains under pressure as Nifty options show a sharp 4-to-1 call to put positional change. Retail participants are aggressively buying calls even as FIIs continue to sell futures. This divergence highlights a clear lack of institutional support, reducing the probability of a sustainable breakout. With India VIX rising 1.96% to 13.63 and the rupee hovering at a precarious 91.98 despite RBI intervention, the fear floor is rising. This rising volatility floor suggests a fragile price trend, making the 24,950 support critical against the 25,700 resistance zone. At the sector level, Nifty Media outperformed with a strong gain of 1.85%, while Nifty FMCG also moved higher, rising 1.37%. In contrast, Nifty Metal declined by 5.21%. Amongst the F&O stocks, Idea was the top performer, gaining 10.75%, while Hindustan Zinc was the worst performer, down 12.47%. India's fiscal deficit stood at 8.6 lakh crore rupees, or 54.5% of the full-year target during April to December, improving from 56.7% a year ago. The centre has pegged the FY26 fiscal deficit at 4.4% of GDP, amounting to 15.69 lakh crore rupees. On commodities, COMEX gold witnessed its worst single-day fall in history last week, plunging nearly 9% as prices settled below the $4,900 level amid aggressive profit booking. The relentless rally in gold and other precious metals came to an abrupt halt on Friday as investors assessed the implications of Kevin Walsh's nomination as the next Federal Reserve Chair. Market participants attributed the sharp correction to President Trump's nomination of Walsh, which triggered a rebound in the US dollar and exerted significant downward pressure on bullion prices. Silver also cracked lower by more than 26%, marking its biggest single-day drop in history, as aggressive profit-taking triggered a broader retreat across the precious metals complex. Prices settled around the $85 level. The rebound in the greenback fueled the sell-off in the white metal, which was already overstretched. We expect prices to trade with a negative bias. NYMEX crude oil extended its winning streak for a fourth consecutive session, with prices closing above the $65 level. Oil futures recorded their sharpest weekly gains since October, as expectations of potential US military action against Iran heightened concerns over supply disruptions. The bullish tone was further reinforced by the loss of US oil production due to Winter Storm Fern, which tightened near-term supply conditions. That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments and securities markets are subject to market risks. Read all the related documents carefully before investing.